Hi, I'm Max Keiser. This is the Keiser Report. Let's look again at what's happening in Germany and Athens. Stacy.
Max Keiser. Germany's Carthaginian terms for Greece. Now, Ambrose Evans Pritchard in The Telegraph says the last time Germany needed a bailout from world creditors, it secured better terms than shattered Greece last week. So in 1953, recall, there was a London debt agreement whereby creditors for all of Germany's debt agreed to take a 50% haircut on German debt. Quote, statesmanship prevailed. The finance ministers of the day agreed to overlook the moral origins of that debt and the moral hazard of rewarding a country that had so disturbed the European order.
Yeah, well, this is interesting, isn't it? A bit of a double standard here. The Germans got a huge break on the debt back in 1953. The other countries rallied to give them a break because they felt that it was in everyone's best interest. Now, here we are in 2012, and Germany's in a position to return the favor, but they balk.
Well, exactly. As Ambrose Evans Pritchard uses the term Carthaginian, a Carthage peace is a peace in which the vanquished is destroyed utterly, a peace deal in which you are wiped off the face of the earth.
That's right. They employed the scorched earth approach to Carthage. That is to say, the Romans did, and they just scorched it. They obliterated it. Now here we have Germany applying a scorched earth, Roman attacks Carthage-style obliteration of Greece, of Athens. It's in nobody's interest, and it's not even in Germany's interest.
Well, actually, Wolfgang Schäuble, according to this article, he was actually quoted, caught on tape anyway, talking to a Portuguese finance minister, in which he said to the Portuguese minister, don't worry, we're not going to do this to you. Our treatment of Greece is in order to appease our population at home.
Right, exactly. This is amazing. It's coming through now that the policymakers in Germany that are applying this scorched earth policy to Greece are doing so to appease their local constituents who want blood for some reason. They're just bloodthirsty, which then brings up all kinds of other questions about, is this the Germany of old? Is this the Germany we remember from World War I and II? Is this the imperial genie out of the bottle once again?
Each failure is ascribed to lack of moral fiber, not to the design flaws in the currency project that Schäuble himself helped create and foist on the German people against their wishes. Belief that EMU fallout from Greek exit, or Grexit in market slang, can be contained by firewalls and more fiscal austerity assumes that Greece is a special case, alone brought low by turpitude.
You're right. So the idea that the scapegoating of the Greek people, that they are of low moral character and therefore deserve what they get. We see, again, this is something used historically by the Germans, by the way, not in the too recent past, to confiscate wealth from another group of people. And of course, during the German confiscation of wealth in the 30s and 40s, they used ethnic division. Here, they just use the new globalization of financial derivative products to carve out their empire and attack those, like the Greeks, using credit default swaps that they can create in the derivatives market, hundreds and hundreds of billions of them, used to attack Greece's economy and to confiscate that wealth.
Yeah, and as part of the propaganda, of course, it was used against the Carthaginians. The same sort of, they're immoral and they kill babies. The same thing, you've seen sort of the same sort of propaganda against the Greeks. You've heard stories that they're leaving their babies on doorsteps because they're so hungry. That's part of the same sort of psychological warfare.
Yeah, the question is, where is Germany going with all of this? Because, okay, they've got the biggest economy in the world, the strongest, most dynamic economy in the world, the second or first biggest export market in the world, great employment numbers are rising. It's an emerging superpower. That's true. Is it going to break out of the euro? Looks that way. Is it going to ally with other countries? Well, this is an interesting development. Please continue.
Well, Carthage must be destroyed, always. And that's where they're going with it. Portugal, Spain, Italy. Those are the next ones.
Well, hopefully it won't be on Paris's doorstep too soon.
Now, of course, the war between Rome and Carthage was control of Sicily and that important sea route. Now, the equivalent in modern times is, of course, the Straits of Hormuz. So let's move on to that currency war going on over there. Iran presses ahead with dollar attack. So this is also from the Telegraph, and they say last week the Tehran Times noted that the Iranian oil bourse will start trading oil and currencies other than the dollar from March 20th. This long-planned move is part of President Mahmoud Ahmadinejad's vision of economic war with the West. Now, of course, this also seems to be some sort of propaganda. Every time we're in some sort of tense moment, they bring out this oil bourse. We've been hearing about it for almost 10 years now.
Going back to when Saddam Hussein was going to trade oil and other currencies other than the dollar, which brought about shock and awe. And then, of course, we heard the same thing coming out of Iran, an oil bourse. So currency wars, you see it in Europe, and now we see it in the Middle East, is what you're saying. The Iranian people, the Iranian government, wants to do non-US dollar denominated oil trading, and this is heating things up, right? This is what driving force. It's not about the nuclear weapons, it's about this currency war. Is that what you're saying?
I'm saying one never knows. Who knows about whether or not the Carthaginians killed their babies? Because the victor always writes the history. Here is the same as part of the propaganda. One never knows if they're killing their babies or actually going to trade oil in dollars. We don't know. But it seems to come up over and over that this is a psychologically important move.
Okay, well, let's just digress for a second, and let me ask you this. Let's say it is about the currency and it's not about nukes. Okay?
Yep.
Let's do a little thought exercise here. Using Jim Rickards' currency wars as the paradigm, what would be the appropriate counterattack from the Iranian axis? Would it not be for them to introduce a gold-backed currency as another way to slam a nail into the dollar's coffin? Wouldn't that also be true?
If they're fighting against an empire, this is the way that empire is able to extract in the modern day the wealth of Iran, the wealth of Germany, the wealth of Greece, the wealth of China. It's because nothing backs the US dollar, but you have to give them your goods. This is your seigniorage. This is them controlling Sicily. This is them controlling the Straits of Hormuz. You know, Iran says they control the Straits of Hormuz, but if you're paying for that oil to go through there in dollars, the emperor controls the Straits of Hormuz.
Okay, good point.
Now, the Telegraph says Iran has the third largest oil reserves in the world, and pricing oil in currencies other than dollars is a provocative move aimed at Washington. If Iran switches to the non-dollar terms for its oil payments, there could be a new oil price that would be denominated in euro, yen, or even the yuan or rupee. India is already in talks with Iran over pricing their oil in rupees, and they said even worse, gold.
Absolutely. So if there are multiple exchanges with multiple prices for these commodities, then the monopoly position enjoyed by the US dollar is shattered, and with that come all the benefits of that, and all the inflation that America has exported to countries like China comes roaring back. So those iPods and iPads, suddenly instead of paying $1,000, you're paying $3,000.
The article also then goes on to mention the EU ban on Iranian oil imports, which comes into force on July 1st, could hit Europe harder than it does Iran. So think of this as you see mass protests, the burning of Athens, the mass protests in Lisbon. Remember, 100,000 people were out in the streets of Lisbon the same time the Greeks were out. There's mass protests and austerity and suffering and economic hardship all across Europe. And now they're going to find that as Iran currently supplies 500,000 barrels of oil per day to the EU, there is a potential oil price spike in the offing should Iran preemptively stop the flow of oil, which it has threatened to do.
Yeah, well, let me go back to my original question. Where is Germany going with all of this? In other words, if that is true, what you just said, and you've got Europe forced to take a position between the US, Israel, and UK, and Iran, which way will Germany swing?
Well, Carthage is the answer again. Carthage must be destroyed. Now, many Romans went and fought all these Punic wars. They fought as valiant soldiers, dedicating their patriotic fervor to Rome. Their lands were stolen. They paid the price so that Carthage was destroyed. They themselves were the victims. This is part of Carthage. This is part of Iran being destroyed, must be wiped off the face of the earth, forever standing up to the empire that they could control, the Straits of Hormuz.
Based on a paper currency that is being diluted and debased into oblivion.
Sure, but it's a great tool for controlling the world. We all know it's a fiat currency that's worth nothing. Imagine if you came up with this fabric of paper here and I had to give you all my labor for that, just because you said it was
I'm going to put Stacy's face on this piece of paper, and it's immediately going to trade at a premium to every other currency out there in the globe.
Well, this sort of mentality, of course, trickles down. Even critics of safety net increasingly depend on it. So this is an article that got a lot of attention from the New York Times last weekend, and it starts with Key Gulbranson owns a logo apparel shop, deals in jewelry on the side, and referees youth soccer games. He makes $39,000 a year and wants you to know that he does not need any help from the federal government. And he says too many Americans live on handouts. And that's why he backs the Tea Party and he dedicates money and time to getting the Tea Party in there to take down the government. Yet, this year, as in each of the past 3 years, Mr. Gulbranson is counting on a payment of several $1,000s from the federal government, a subsidy for working families called the Earned Income Tax Credit. He has signed up his 3 school-aged children to eat free breakfast and lunch at federal expense, and Medicare paid for his mother, 88, to have hip surgery twice. So they chronicle over and over that, in fact, much of the social safety net in America was in order to keep Americans from extreme absolute poverty. But actually more and more of that pie is actually going to the middle class who are making $39,000, $40,000, $50,000. And they're getting more and more of that pie. And actually the poor, the very poor, are getting less and less of it. And it is that middle class that they highlight so well that they're the ones that are most against federal handouts to other people.
And the federal government does such a good job at it, these people aren't even aware of it. It's invisible to them. They're completely subsidized by the government, and they have the nuts to come on and say, well, I don't want any federal subsidy. I don't need it. I'm a John Wayne. What do I need that? Meanwhile, his entire life is subsidized by the government because it's done so well that he doesn't even know it. What a freaking baby. The guy needs his diapers changed.
Now, I want to end on one little quote here from Socrates, because we're doing all these history lessons. We're going back in history to Carthage, and of course, Athens on fire was in the news. And it really fits in with these themes that we've been talking about today. At his trial, when Socrates was asked to propose his own punishment, he suggested a wage paid by the government and free dinners for the rest of his life instead of the death sentence which he received.
Well, he's a philosopher, isn't he?
It's interesting that even 2,500 years ago, this was still an issue of who gets the free lunch and a government salary. On one hand, people want it, but as Socrates is perhaps suggesting, it's also a punishment.
Well, had Goldman Sachs been around, they would have created hemlock futures and forced him to buy into $50 trillion worth of non-collateralized hemlock futures contracts, and he would have gone bankrupt and killed himself anyway. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming your way, so stay right there. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to New York and speak with Chris Whalen of Tangent Capital. Chris Whalen, welcome to the Keiser Report.
Hello, Max.
All right, Chris Whalen, let's get into this question on everybody's mind. The latest Greek deal. Your thoughts?
Well, it's not so much a deal as buying time. We're now going to try and convince all these investors to take a 70% loss and take these new pieces of paper in exchange for the old ones. I don't know if this is going to be successful. Eventually we're going to have a new government in Greece too, and they may not agree with the path that the technocrats are taking at the moment. So I think you have to view this as a step towards some kind of resolution, but I don't think this is it.
All right, let's try to look at this, higher up. Just look at the euro itself. Not sure if you have comments on this per se, but I know your colleague over there at Tangent Capital, Jim Rickards, is very constructive on the euro over the dollar. Do you have an opinion on this currency play?
Well, it's funny. You're right. Jim Rickards is very bullish on the euro, or at least constructive, and so is my good friend David Kotok, who wrote a book a couple of years ago suggesting that people invest in Europe. I'm still waiting to hear what is going to bring all of these countries into full union, both in a fiscal sense and the currency. So we already have a currency union, but we still have all these disparate countries, and I'm not sure that they have really yet agreed to go all the way. So if you're asking me, do I think the euro is a good place to store value right now, the answer would be no. I don't think the euro is going to disintegrate. I think the core countries, Germany, France, the Benelux nations, will probably stay together. But the question is, what do we do with the periphery? Even Italy. I just don't know that the Italians or the Spanish can bring their countries into line so that they can live like Germans. So I just don't know where we are in terms of the euro. I always remind people that the Treaty of Rome and the coming together of the Western European countries was an American idea. And I'm not sure it was terribly well thought out. The whole rationale was to prevent another war by putting all the Europeans together, tying their fate together. But in terms of thinking through all of the details, no, we've been doing it piecemeal. So I just don't know what the EU will be in 2 or 3 years. I think there will be a euro, but I'm just not sure if we'll have 25 countries in the bloc at that point.
All right, Chris Whalen, now I don't want to get you in trouble with the FBI, but did going off did going off the gold standard have anything to do with the U.S. going bankrupt? And what role could gold play, if any, in making it solvent again? So I kind of presume that we're talking about dollar weakness here. So using that as the presumption, can you address this gold question?
As I said in my book, Inflated, gold is symbolic as a store of value. It has had a great following in the U.S. And you're right, in the 30s, FDR confiscated all the gold while he was devaluing the dollar to try and get the economy going. Now, since then, or even before then, we essentially had the government impose their monopoly on the definition of money in the U.S. So today, gold is considered a collectible. It's not even a monetary asset. But this goes back to Lincoln. If you recall, how did we finance the Civil War? With paper money. Bad money, and the little banks fought it. The big banks, national banks, were created to buy the government's debt. So the devaluation in the 30s was really later. The refutation, if you will, of a gold standard starts with Lincoln. And ever since, the government has used paper money to propel growth, layers of leverage if you think about it. So we create the Fed in 1913, you have the collapse in the 20s and the early 30s. They confiscate all the gold, and we continue essentially equating the dollar with gold up until today. So all of the leverage we've seen accumulated since the 30s, housing, global lending institutions, big banks, everything else, are all predicated on this use of paper money as a substitute for gold in a monetary sense. And we've kind of run full course, if you will. So if you go back to your point, Max, gold as a haven, yeah, I think it is, but don't be blind to other opportunities, because gold hasn't quite kept up with the inflation of the paper money world.
All right, let's talk about paper money and the U.S. banking system, in particular, Bank of America. Now, I've listened to you. You've been interviewed a number of times on Eric King's King World News, and I recommend anyone who wants to catch up on the banking sector very specifically to listen to those interviews, because they are excellent. But can you speak about the Bank of America, where we are now with the Bank of America story? You know, there was that when it was down to $5 or $6 a share, there was, I believe I heard you say that it had a lot of risk on the downside of the stock price due to their problems, et cetera. Can you give us an idea where we are now with that Bank of America story and the U.S. banking as a whole?
You know, Bank of America, you're right, went down to $4 a share late last year, largely because of the European troubles. In their wisdom, the European governments decided to prohibit short selling of EU bank shares because they're so closely tied with the governments. Obviously, if the bank shares were falling in value, so would the political prospects of the various governments in the EU. So unfortunately, when the markets get anxious, they sell the U.S. financials because those markets are still open. And that's, I think, what drove Bank of America down to $4. Now, does the bank need to be restructured? Yes, in my opinion. The preponderance of litigation that they're facing involving mortgage-backed securities, the state of New York, Eric Schneiderman, the Attorney General, I think is going to be going after Bank of America for taxes, because many of these deals were not put together properly, so they were not exempt from state and federal taxes. This is going to be a nuclear weapon, Max, that nobody is paying attention to.
And let me just jump in for a second, Chris, because what about Obama's latest deal with these banks? I mean, again, they seem to be getting immunity. So is that, how's that factor into this?
No, about limited immunity, this was not a great deal for the banks. What happened was the attorneys general around the country, many of whom want to be governor, that's what AG stands for, by the way, aspiring governor, they needed to get a deal done now because we're in an election year. Schneiderman, the California Attorney General, the Delaware Attorney General, all went along with this settlement on foreclosure abuse issues, but it didn't get them immunity from more serious prosecution for taxes, for securities fraud, for other things that they're all facing. Bank of America is facing over $100 billion in claims for securities fraud, contractual issues from investors. They're all going to go to trial. And I would tell you right now, I've been following this stuff pretty closely. I think BA is going to lose in court. So either we restructure this company with the help of the bankruptcy court and bring this whole mess to a conclusion, or we're going to face years more of headline risk when somebody like MBIA, for example, the insurance company, wins in court against Bank of America and ends up with a double-digit judgment against them. What are we going to do then? That's why I've been saying, you know, we really need to bring this to an end. And the way you do that is either with a receiver, as we saw in the Stanford group, or with a bankruptcy, as in the case of Lehman Brothers. But to me, that would be the good news, because if we go down that road, then we're going to be near the end.
All right, let me describe to you a situation, maybe says more about my naivete than anything else, but tell me where my thinking is either on target or off target. It seems that every time we hear about a bailout or a rescue package or a multi-billion or trillion-dollar cash infusion to settle these bank debts, banks suddenly, from some place called the shadow banking system, say, oh no, we have another $500 billion in debt that we didn't record last quarter. Is that ever going to stop,
right,
number one?
Right.
Is there a limitation, or are they just playing with us?
Well, they are playing in a sense. I mean, look at the foreclosure settlement. The banks have already stolen enough money from investors in terms of raping these mortgage-backed securities trusts to pay for all the settlement. So I don't feel sorry for them at all. Now, the real question is, what else have they not told us? And this goes to your point about off-balance sheet vehicles, gray market banking, everything else. That marketplace is shrinking. It's running off. And we're not creating any new assets in, say, private mortgage-backed securities. Even Fannie and Freddie are starving to death, because 90% of the new originations in the U.S. today are getting a guarantee from the Federal Housing Administration, interestingly enough. So, yes, there's more problems there, and you are going to hear more about it in terms of things like litigation, unliquidated claims that nobody's heard about yet. I'll give you a good example. Look at J.P. Morgan and the indigestion they're getting from Bear Stearns. You know, Jamie Dimon told us 2 years ago that Bear Stearns would not be material to their results, but it's going to be very material because investors have lost more than half their money on the securities that they created. So there's still stuff that fall out in this whole mess. We kind of know what the numbers are now, Max. I don't think there's anything particularly new in terms of their exposures, but the thing is risks that we haven't talked about, like Eric Schneiderman deciding that these people owe him, you know, billions and billions of dollars worth of taxes. That's a new factor that nobody's thinking about now.
All right, we got about 1 minute left. I just wanted to have you comment on something. It's a bit on the technical side, but I think it's very interesting. While Ben Bernanke is talking about the need for lower rates as a stimulus, you have been quoted,
yes,
and I've heard you talk about this, there's a need for interbank lending to be stimulated by raising rates, completely against what you hear
yes,
mainstream guy. We only have about a minute, I'm sorry, but can you kind of run through that a little bit? Because I think it's important that people understand this.
Well, again, going back to the point about extreme swings, I mean, the Fed has had to put interest rates at zero to just try and keep the U.S. economy moving forward. It's like a shark. You have to have water going through the gills in order for the creature to survive. And yet, at the same time, by putting rates at zero, you're taking all the incentive away from banks to lend to one another. Why would you bother doing repo, for example, where you lend treasuries overnight for nothing? You're not being paid for the risk, and there is risk in that transaction. Likewise, the whole interbank market's gone. Listen to Jamie Dimon in the most recent conference call. He confirmed that they're not doing any unsecured lending with other banks. This is a disaster. So what I've been saying is that the Fed should gradually let short rates go up to 0.5 point, maybe 0.75 point, so we can again start to see the private short-term credit markets revive. because today all you got is the Fed. The banks are dealing directly with the Fed. They don't want to deal with one another. If we don't get credit to expand, Max, we're not going to fix jobs, we're not going to fix the global economy. But it's got to be private credit expansion. The central bank's doing what they're supposed to do, but they've done it for too long. And we got to slowly let rates go up. And imagine, even if we had 0.5 point Fed funds rate, that's still historically very low. It's probably negative in terms of inflation, but at least it would give people a reason to do business again.
Right, banks make money lending money. So unless rates are at a level that they can make some money lending money, then you're not going to get any bank growth, therefore no credit growth.
That's right. Yeah, the great editor of The Economist, Bagho, said it well. He said, don't keep rates at zero for too long.
All right, with that, we're out of time. Chris Whalen, thanks so much for being on the Keiser Report.
Thank you, Max. Look forward to it again.
All righty, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Chris Whalen. You can follow him on Twitter at RC Whalen. Of course, you can follow me on Twitter, too, at Max Keiser. You can send me an email at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.